Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon as any form of advice at all, is just general in nature only. The inflation genie is well and truly out of the bottle. We already knew that, but last week it got absolutely confirmed with what we saw out of the UK and Europe. Goes hand in hand with what we already knew out of the US, but Canada is also joining the party, along with New Zealand and us here in Australia. I don't think, though, you can go past at the moment the main story around how this is going to be contained, and that's probably the right word, is what happens in the US. And last week's Senate testimony from Jay Powell was nothing short of spectacular. It was fireworks left, right, and centre. Don't forget, end of this year, midterms are coming up, and both sides of politics in the US wants to hang the Fed absolutely out to dry and make all of the issues that are going on in the States their problems rather than the political problems, because it's been, in their view, the issues of monetary policy rather than fiscal policy that have led to the current scenarios that we find ourselves in. It's a bit hard to argue, but I understand their point, because let's be honest, it is partly true to see so much inflation flying high and how slow all central banks, not just the Fed, were to move around the inflation genie. So how do you contain it? Well, there's a crass market joke around inflation, and that is, how do you kill inflation? Create a recession. And looking at what Jay Powell's testimony said last week, he almost said that that's a probability of happening. He can't say it's going to happen, but it's clear that they believe that it's a fair chance that it's there. He was quipped when he was pushed on that point around it's a possibility, it's certainly not what we want to do, but the current scenario around the Ukraine war and supply issues makes that scenario more probable. That's the central bank saying yes. That is as close as you're going to get them from saying, yes, a recession is likely to happen. And it's clear that's where the pricing is going. The other thing that's about it is that if you listen to what the Fed is saying, the only lever they have to pull is rates, and they will do whatever it takes to get the inflation genie back in the bottle, because it's so regressive in terms of what it does. The loss of purchasing power, the impact particularly on lower socioeconomic groups, is so high that it's more important to get that under control first and then worry about the economy later. That's basically what they're saying. And that's what the positioning is going on right now. But that also therefore means one thing: rates are going higher. And let's have a look. One of the most dovish people that are on the board in Mary Daly from San Francisco, who is now also one of the more hawkish people out there, even she believes that next rate will be 75 basis points, maybe 50 if the overall scenario around growth is slowing down. But she's of that view. 75 bips is where we're going. She wants to get to the neutral rate as fast as possible. And she thinks in the current scenario, neutral rate is 3.1%, not 2.5% when it's normally going to have an inflation rate of 2%. And that therefore means rates are going to be higher for longer as well. That if somebody like her can see it that way, that's what we need to do. Which all of that conclusion for our world means the USD remains absolutely in the ascendancy. There's no other way to argue it. Have a look, euro dollar at 105, you look at cable sitting at 122, you look at dollar yen, that's sitting at 135 and still 2-decade highs. Aussie dollar is still below 70 cents and not going to go through it anytime soon. Kiwi, CAD, take your pick, they're all the same boat. Because in the main, it's all around where is the risk off, best, safest place to park your money. Well, in doubt, it's always going back towards the reserve currency, being the USD.